What have you made of the earnings season so far? I mean, we can argue about 1 or 2 or 3 disappointments here and there, but I think things haven't looked as bad as we were fearing. Or is the bad going to come in the second half?
Yeah, I agree that the earnings season has gotten off to a very decent start, and I think the worst of the earnings downgrade is behind us. If you look so far, about 25 or 28 companies which we track, which have reported so far, about 2/3 of the companies actually have reported in line or better than expected results. About 1/3 have disappointed. So I think and this has been my view that first quarter earnings season will not be an outright disappointment. We got to segregate it and look at bottom up. I believe there are certain sectors which will continue to perform, where the performance will be evenly spread out throughout the year. So the performance will be good from first quarter itself. For example, four-wheeler companies, auto ancillaries, private banks, NBFCs, IT, your telecom, consumer. I think all these sectors will start performing from first quarter itself. On the other hand, there will be a few sectors where earnings will be back-ended. For example, cement or industrials or two-wheeler, where first half is going to be weak. And there are a few sectors where earnings may not pick up at all in FY16. It's more of a medium-term story. For example, metals or utilities or PSU banks. So, those are sectors where we believe that, FY16 itself will be a complete disappointment. So, I think, and that early indicator we are already getting that, the companies which I am referring, these sectors are already performing well.
But how do you pick and choose within these sectors which are already performing? For instance, IT, it's not a fabulous story or a blanket call for the entire sector. Within the IT basket, you've got to, take your pick there as well.
Yeah, that's right. So within the IT sector, our preference has been for the mid segment. But having said that, there could be one quarter of disappointment from a company. But, if I take FY16 as a whole, I would still think that the IT sector as a whole will perform well. There will be a decent, we are talking about 10 to 11% kind of a dollar revenue growth and dollar PAT growth for the larger IT companies, slightly more, low teen growth for the mid segment IT companies. And what I believe will work for the IT sector also is the fact that, the INR is expected to depreciate as we go along, and that will be a big tailwind for the IT companies. So the rupee EPS growth will be much stronger, and overall valuations are reasonable in the sector.
But did Infosys surprise you, the commentary and the performance?
Yeah, of course. First quarter
for most people
performance was surprising. The revenue growth was much stronger than what we are expecting. The management is very confident of the outlook for rest of the year. So definitely that was a surprise.
So which is why my question, what's the pecking order right now? If you are at a liberty to say that as a house call, what do you like in large cap IT the most? And within mid cap IT, it's such a wide basket. I mean, KPIT today came in and much contrary to what analysts have pegged it, was extremely confident about FY16. Yeah, there are some MindTree and a few others which have also come in well. So what's the pecking order?
Yeah, so I wouldn't really wanted to get into individual stocks.
Yeah,
but,
okay, fair call.
Yeah, but of course, our preference has been for the, some of these mid-cap names like HCL Tech or TechM or MindTree.
You're calling them mid-cap.
Yeah, yeah, basically the thing is that, not, yeah, they are exactly.
I get your point.
Yeah.
Okay, fair call. Let's talk about the other space which is in news and export oriented and pharma. Do you believe that the problems with the US FDA and the clearances thereof are here to stay? Because clearly from Sun's commentary, it seemed that it's not just a Ranbaxy issue, it's also a Halol plant issue as much. So do you think those problems are here to stay, and therefore will pharma have a challenging FY16?
Quite possible. The pharma sector, you're right that a lot of companies are actually facing this US FDA issue. Even the best of the companies in the sector are facing this problem. And we have seen, so many incidences of this happening in the last couple of years. And this brings a lot of uncertainty to the sector. Which company will get impacted, which company will receive a warning from the US FDA is highly uncertain. And what is worrying, from an investor's point of view is that the sector has done so well over the last 3 years. The valuations are really stretched. If you look at today, the average PE of the sector is something like 28, 30 times 1 year forward. The average for the last 5 years is only 20 times. So the sector is trading at a huge premium. And with these kind of disappointment, with slight warning, you saw what happened to Sun. So I would be cautious in the sector.
But what do you do as an investor? Do you just take your profits off the table because the sector has held out so well and has given fabulous returns, or do you deploy these dips to start perhaps nibbling into stocks which you always wanted to buy? I mean, what do you do? Do you be patient or do you just get out?
I would be reducing my exposure and would be getting into more pro-cyclical names. Those are the sectors which I think will do well. Right now, people are uncertain about the strength of the cyclical recovery. But as we see more and more signs of the cyclical recovery happening, I believe these sectors will do well. So, yeah, clearly I would be reducing my exposure.
You spoke about a small bit of recovery coming in cyclicals as well. Where do you see the first signs, and which are the ones that are likely to show an earnings growth sooner rather than later?
Yeah, so if you look at banks are cyclicals, private banks and NBFCs are reporting very strong numbers. And, you know, banks which have reported so far, you know, their growth is twice that of the system growth rate. So they are showing earning growth of 20%, loan growth of 20% plus. So that's a good thing that, you know, we are seeing that recovery. Asset quality is very good. Fee income is strong. The other area where we are seeing a bit of cyclical recovery is on the auto segment, where commercial vehicle segments are very strong, medium and heavy commercial vehicles. Of course, LCV and two-wheeler sales are weak. Passenger sales are recovering a bit, but cannot say a very strong recovery. But their numbers are decent. I think recovery will continue. Some of the other consumer discretionary companies, paint companies, have reported decent volume growth number. You know, if you look at for the leading paint company, their volume growth was the highest in the last 3 quarters. Double-digit volume growth numbers.
The commentary wasn't the strongest, though.
Commentary, you know, so the thing is that, you know, the commentary for these companies will be a bit conservative. See, the thing is that you have to take that conviction call. You know, it will be, you know, they would try to be conservative. You know, it's not that the recovery is very strong. So, better that you err on the side of caution. So, therefore, I wouldn't be surprised. But I would not take that entirely on face value that, you know, because that is theirs. So, there you are seeing some bit of recovery. I guess these are some of the areas where there is recovery. Telecom, if you look at again, data revenue, voice revenue numbers are decent. Airlines have shown a very strong pickup in passenger volumes. These are patchy numbers. Of course, the recovery is not very strong. It's tentative, but that is the call one has to take. That, you know, are we seeing early signs of a recovery? And this should gather momentum as we go into second quarter and then into the second half.
I want to talk about some of the fad sectors, and fad sectors I say it because diversified as it may be, for instance, a textile, you know, pick up any stock and that's been giving you fabulous returns for the last, you know, 3 to 4 odd months. What is your view when it comes to niche spaces like this with niche companies doing their own individual businesses?
Yeah, are you referring to
textiles?
Textile, okay.
Yeah.
See, the thing is that, you know, maybe you're seeing some pockets of recovery. Again, you know, you're right that textile is one sector. There are a lot of other such niche sectors which are actually doing well. Tire, for example, tiles, paints, industrial paints also. There are certain segments which I agree, a lot of agri products companies are doing well. So these are niche segments which are seeing pockets of recovery from urban centers or from rural sectors. We tend to look at the overall market number and then therefore tend to, you know, get an impression that the market is not recovering. But I think, you know, there are definitely areas of recovery. What has also happened is that because of falling commodity prices, India is a big beneficiary of that. And a lot of these companies are actually seeing gross profit margin expansion. They are also able to pass on the benefit of lower cost to their consumers. Because of that, we have not seen a strong volume recovery, but it's a matter of time before volume recovery also sees. But in the meantime, we are seeing gross profit margin expansion, and which is leading to, you know, higher earnings growth.
So does textile in particular interest you as a pocket? I mean, I'm not looking at individual names, but just... It's
too small a sector, and actually there are hardly any stocks that we cover in the textile segment. So it's a very small sector, you know, at least the FIs would hardly be interested in that, but of course, there are a few companies.
Yeah, the largest one is a common neighbor, by the way. One of the larger ones is a common neighbor to all of us.
Yeah.
But nevertheless, so since you brought that point up, what are client conversations looking right now? Where are clients asking you, or where do you see the client interest being the maximum right now? Is it really for the performing sectors, or is it for the turnaround place? And are there things that the clients want to load up in particular in terms of themes or spaces?
Okay, if you look at, of course, there are diverse set of clients, so it's very difficult to generalize.
But the larger ones.
But I would say, for example, if you put them in two buckets, FIs and DIs. Now the FIs are looking at some broad parameters. They are seeing for some signs of recovery in the earnings cycle. They are seeing for some resolution in the key legislations where they're going to pass. Of course, everybody is watching at the monsoon. So those are the things which people are watching. But the DIs also, the same things would be there. But what we are seeing is that the biggest positive in the last few months has been the very strong domestic mutual fund flows. So in the last 3 months, the numbers are all there in the public domain, but we have seen something like 32,000 crores of inflow, net inflow into domestic equity mutual funds in the last 3 months. These are the strongest number we have ever seen. It's up 3.5-fold YOY. It is up 60% Q on Q. And the domestic mutual funds are strong at a time when the FI inflows have slowed down, and at a time when the insurance flows actually still remain negative. So what are the DIs looking? If I were to sort of hazard a generalization, they are looking at again, private banks or banks generally are liked by almost everybody. Consumer discretionary space is liked by almost everybody. IT is a sort of is a non-consensus call. Some people like it, some people don't like it. Industrials again is a non-consensus call where some people do not like it because of high valuations, others like it because of the high growth prospects. Some of these beaten down names, whether it is PSU banks or metals or utilities, are generally not liked by the FIs. It is liked by the DIs because they are contrarian calls, they are value buys. So that's I don't know if I answered your question.
No.
Okay, so just 30 seconds. We were talking about niche plays, and you said tires also is a space like that. We've seen what a fabulous performance it has given, solid management commentary. It's a thumbs up for the sector?
Yes.
Okay.
We definitely like all the tire companies that we cover.
And you think they're going to continue to deliver good?
Yeah, so right now, as I said, they are benefiting because of lower commodity prices and because of therefore the gross profit margin expansion. But we do expect volume growth to pick up because of pickup in the OEM segment.
Okay, and yes, you broadly did answer my question as well, Prabodh. Couldn't have asked for more. Thank you so much for taking the time out and joining us in our studios. Lovely having you as always. Keep on coming.
Thank you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.